All right, guys. Good morning. Welcome back to the show. One of the things that I had pointed out in my last video was how we were making a bullish divergence here on US oil. And pretty much just oil in general is going to start spiking up. The reason why is because of all the regulations and restrictions that they've put on Russian oil. If you just think about it in macro terms, energy is energy. And whenever you start putting restrictions on energy from a certain part, the world that produces the majority of it, it's only going to drive up prices and demand for that because it's harder to get it, if that makes sense. And energy impacts everything that we do as far as food, materials that we buy, car parts, transportation, absolutely everything. So if this starts to spike up, we are going to start to see inflation. If not, energy prices start impacting everything that we pretty much use to live. So if you can see right here, it started to break out. It actually is confirming the breakout, and it is respecting this bullish divergence. It landed, tested, finally broke out. And it does come around the same time where the sanctions on oil are starting to take effect. And then what you can see here is the moment that this started to break up, this was literally, I would say today, if not last night. Check this out. Look what it did to the S&P 500. It started to break down. Let me see if I can stretch this out. Yeah. So this is the first red wick that we got. I am on the 4-hour, but if we go to the daily, see how we had that red wick down with the green wick up on oil. So up oil, down market. That's usually the correlation. And so what we're going to have here is, just like I had actually mentioned in my previous video, that we're going to get a little hump. And then once this intersects and crosses over the line, we may get a drop here. I'll draw it out. Let me see. But one thing that I've noticed is they don't like to make it too easy for us, and it has been fairly easy. Let me see if I can get rid of this. Give me 1 second. Drawing this out in real time. See how it always goes up like that? Just because it has been repeating the same pattern over and over and over, I'd just be careful in case they want to try and push this up. So say it goes like this, and then like that. And then either here we'll bounce, or we'll get this and then come back but overall, the direction and the trend of this is starting to go down. You just want to be careful with these kinds of things because you never know how they're going to try and use oil to their advantage. The US has strategic oil reserves that they like to release every now and then. It is depleting, so I don't know how much longer they can do that. But as far as this, the S&P 500, it is going to go back up just for a little bit. Whether it wants to go sideways or just come back down after this death cross intersects downwards. And as far as this, the bearish divergence overhead is starting to play out. Should this happen, it is going to make a hump right here, and then it'll more than likely continue with the negative bearish divergence and just play it out all the way through. And then as far as Bitcoin started to drop as of last night. That thing trades everywhere around the clock. So we are starting to get some, looks smaller than it actually showed on the chart. But right here, you can see a wick. This was yesterday. It started to sell off, but it barely stopped. What you can see here though, is that it's starting to roll over. There's a bearish divergence on top and on the bottom actually, but it looks like the bearish divergence is going to play out over the bullish divergence. The bullish divergence is more macro, more long term. For now, we are going to get, or more than likely, we're going to see this thing roll over. And as well as this, if you can see on the rate of change, we have a bearish divergence that we've been respecting for a while. I've gone ahead and showed you that this is just respecting the weekly. If you can see this goes all the way back up. So what I think is that we're going to drop here, but because we're going to drop here, that would mean this is going to roll over at some point, which is why I drew that. And once we do roll over, because we are starting to squeeze, I do believe we're going to get a breakout. I have a feeling we're going to get a breakout. People are mentioning something along the sorts of lines, but they're not really following it up with the TA. The reason I'm showing you these on the longer macro view is because the weekly shows the long-term trend that we're in. And right here, we have a huge bullish divergence that's starting to squeeze onto the bearish divergence that's overhead. So even though we may get a rollover for the one of the last few times here, we more than likely will see a huge push at some point beginning next year. When that will be, I have no idea, but I'm just saying what I'm seeing here on the chart because this thing is starting to squeeze. And now, as far as the DXY, I'm still bullish on it long term. We might go here, and then if they still keep increasing rates, we might get another hump here. But for now, I do believe that it'll start to roll over. As you can see, it broke down here. It is looking for support, so support might be around this area. 103, 104. Depends if it can make it above the resistance right here. If not, it'll just come down for support right here, but I wouldn't count it out just yet. And look at that. Let me go back to the daily. Okay, and let's go to the VIX. Oh, the VIX is shooting up. Look at that. So this is what I had drawn out, that it was just going to come back for its hump. But what more than likely is going to happen is this. Even though it went a little bit higher, it doesn't look like it's getting anywhere. Let's see. Yep, no, same thing. So this more than likely will come down for a retest. It always has to find support. If it breaks out and doesn't come back to test support, it's more than likely a failed break. But because it is not moving super far away and it is staying range bound right here for confirmation, I wouldn't put it out of the thought just yet. More than likely, we'll see a confirmation and then we'll bounce, just like how I thought it was going to happen around here. You see that? We'll see something similar to that, but I wouldn't count it out just yet. I'd stay very vigilant because more than likely within the next couple weeks, we're going to see a short-term bottom followed by pretty much a good run-up. And staying on top of these, especially these signals, these really help you learn when it's the right time to get in, when it's the right time to get out, especially for trades. I was trying to catch this little wick right here, but this thing lasted less than a minute. Like it literally went down, and as I was tapping in the order, it bounced. So you always have to stay vigilant. I don't think it's done coming down just yet because of my own personal chart right here. I do think it's still going to continue rolling over. We may get a little bit further sell-off just to comply with the bearish divergence that we have overhead. And from there, once it starts to roll over, we'll see a new low. More than likely, we'll see a new. Where it's going to be, I have no idea. That's what I'm trying to figure out on this one, just because the most aggressive gains can be made on this. But none of this is financial advice. This is just what your risk tolerance is. This is some of my own personal charts and what I like to trade. One of the biggest things that I've learned is don't marry an asset. Make sure you get your gains out and keep trading, because that's how when you pay yourself first, that's when you succeed. And right now, we are coming up to a time of opportunity. I do believe that is going to be within the next couple of weeks. Just stay vigilant because you never know when it's going to happen. It can just randomly happen out of nowhere. Where, you know what, people with big money said, you know what, I don't want to take that risk. I'm going to easy up on my portfolio, take some off the table. And what we're starting to see a lot now is a lot more of that, just because there is a lot of doom and gloom in the market, and usually that's when you want to stay most vigilant, because once everybody starts to leave, like mass exodus just because of time-based capitulation, you want to be ready for that, because when everybody leaves, you want to run into the door. It's kind of like people are leaving a burning building. You want to be the guy buying up all those assets at a discount, right? So that's pretty much what we're going to talk about today. And I hope you guys like the chart. If you have any further questions, this is just like the macro view of it. But if you have any questions, leave them down in the detail in the comments below. And this is pretty much where I think we're going. Whether it happens in December or sometime in January where we see the bottom, that's great, but don't expect it for it to be easy. They like to do these sorts of things. Once we're headed in one direction, if that direction is established to be going down bottom and finding new supports and new lows, we will see bounces. The market makers always want to make money, and the way to make money is to try and hurt bears and longs, So if you have any questions, go ahead and subscribe. I like the channel. It does help the YouTube algorithm push the video out a little farther. So for now, go ahead and subscribe and have a good day.